Maverick Traders, how's it going? This is Rob Reinhold. I'm joined by Darren Fisher, and here we are. We are heading into the third week of September. That means that this is monthly options expiration this week on Friday. So let's take a look and see what happened last week in the news. We got a pretty good bounce last week. So we had the market close on Monday for Labor Day, and then Tuesday was a shaky day, and Wednesday actually morning looked pretty shaky. And then the buyers came in, and Wednesday, Thursday, Friday were great days, and we're right back up into the area we call no man's land between the 20 and 50-day moving average. Interest rates continued to rise, and the market shook it off. We had several Fed speakers that were still hawkish. We had two of them come out on Friday, and the market didn't care. It seems like the market is kind of looking past higher interest rates and a tighter Fed, because they look at the numbers, and let's take a look at some of the economic numbers we got last week. If you take a look on Tuesday, we got ISM services, 56.9. That's a good number. That is just a solid number. Unemployment claims, 222. That is extremely low unemployment claims. And so here we've got like a bunch of things happening here. We've got this inflation that's very high, out of control. Maybe looks like it's going to stop going up so much, but we're definitely not going to see it come down. We've got a stock market that's really been shaky lately, but we've got an economy that, for all intents and purposes, when you look at the numbers, it looks like it's going to hold in. And so I think we are exactly where we should be, where we're having moves down and to the upside. But when you take a look, we're basically where we were when we started the summer. I mean, Darren, do you have a strong take on, just what we're seeing in the economy versus what we're seeing in the markets?
I think there's definitely disconnect with what we're seeing in the economy versus what we're seeing in the markets. We've got to take a look at this in a little bit of context, I think. I mean, this was a 3-day rally, and that was it. We're going to see if there's any if there's any follow through next week. I think next week is going to be the key week to see if there's any type of follow through, or if we just roll over. I mean, see, it's been pretty strong. I mean, the Dow was up 2.7. S&P was up 3.6. Qs were up 4. Russell was up 4. Oil really did nothing, down 0.6%, and gold really did nothing too. So to me, you just look at these charts. All I see is a 3-day rally. That's all I see at this point. We're coming up to the 20-period moving average, very, very quickly, which also corresponds to that 410 level at some pretty. There's some pretty decent resistance at that level right there. What was support, can rapidly become resistance. So, my outlook for the week is that we drift up a little bit, but then I think we've got to see, do we roll over? That's the question. I think that's going to get answered by next Wednesday. That's my take on it.
And look, Darren, you're right on, because, we did just break the 50. We did make new lower swing lows. So the market trend is more down than up. So anytime you recognize that the trend is more down than up, every rally must be suspect that it is simply a bear rally, because that's what a downtrend is. It's just simply a consecutive group of lower lows, lower highs. So you just have to assume every single one of these moves higher is a rally until the trend actually changes. Then all of a sudden, okay, now we have to take a look at these differently. But I'm with you. Until this market can climb up above this 20 and make in maybe one new swing high and one new swing low, I'm not ready to totally buy into this rally. That being said, I agree with you. These were very strong green candles. Likely is going to carry over a little bit into next week. But the question is, can we break through? We come over here to the Qs. We're getting the same thing. We have reached back above the 50-day moving average barely. We're still trading below the 20. There is a bunch of resistance in here somewhere. So same thing here. It was a nice rally. And look, and I got to say that we were at a -2 last week. Both Darren and I thought we were going to have a fairly significant move lower last week, and we were definitely wrong on that. We were looking at down 2% for the week, and we got an up 3.5% for the week. And I was talking to Darren earlier about how we do this session every weekend, And, most of the time we got our analysis correct, and sometimes we're fairly close. And then about 3 or 4 times out of the year, we are just dead wrong. Just dead wrong. And this was one of those weeks. This is one of those weeks we thought there was a little bit more downside. So here we are. We've got this rally. The big question is it the start of a new uptrend, or is it simply a bear rally? And at this point right now, you have to say it's a bear rally until we're proven differently. That is exactly what a trend trader does. They follow that trend. We go over here, take a look at the VIX. Okay, VIX is still elevated a little bit. We're not down to that 20 that we had just a couple of weeks ago, but we're up in the mid 20s here. So nothing to see here. It's basically saying people are a little bit more worried than they were 3 weeks ago, but not all that much. So I think the market is sending us a lot of mixed signals. And I think whenever the market sends you mixed signals, you have to acknowledge that and just say, okay, well, the market is not in a clear trend at the moment. We'll keep watching. But whenever you don't have a clear trend, it means that you have to be selective on your trades. And you have to have some longs and some shorts and some sideways stuff. It's very important to be basket trading in times like these. Now remember, this week is monthly options expiration, so all of our traders, please close and manage all of your expiring monthly options positions. And then let's take a look at next week's events, because next week's events, there's really one that's important and the rest are fairly unimportant, and it is the CPI. The CPI report on Tuesday. If you see, the forecast is for a negative 0.1. Now that is a month over month reading. Year over year, we're still in the 7 to 9% year over year range. But what everyone wants to see is they want to see the month over month start to cool off a bit and get that velocity down. I think the market is braced for a Fed that is still going to raise 75 basis points at the next meeting. And I think this number has to be like a negative 0.5 or a negative 0.4 to really get the market excited that, okay, maybe inflation is over and the Fed's going to back off. If we get that kind of number, negative 0.5, negative 0.3, the equity market should have a really big rally and the dollar should sell off. That's what should happen. If this number is hotter than expected, let's say it comes out at plus 0.3, all of a sudden, I think that's going to be just the opposite. I think the equity markets are going to get weak. I think the dollar is going to spike. Interest rates are going to spike. But I think Tuesday is the day that if there is going to be a pivot to this bear rally, Darren, I think it's Tuesday. What do you think?
Yeah, I think that's a key point right there. The other one that I'm looking at as well is Thursday with the Empire State Manufacturing Index and the Philly Fed. Those I think you have to take both the CPI and those manufacturing numbers in total to get an idea of where the economy's going, where inflation is going. So I think those are going to be the two key days. And you got to remember these regional manufacturing indexes are often leading indicators about where the rest of the country's going. So I think those are the two pivotal days.
Yeah, great call. So we're here at a zero. We got a little bit bearish there last week. We got down to a negative 1.5. We kind of straddled the negative 1 and 2. And with this rally, you just have to look at it and say, hey, you know what? We are in the middle of moving averages. We don't have any clear trending indicators. So calling a trend is impossible at this point. So again, we always say at Maverick, trade the market in front of you. Not the market you want it to be, not the market you think it should be. This market is just sending very confusing signals. So we have to admit that there is no trend at the moment. So let's take a look and see if there's any trends going on in the sectors.
Yeah, that's interesting. When I was pulling these charts today to take a look at them, a lot of these sectors just moved in lockstep here. But taking a look at performance, you've got consumer that really did well. That was up almost 6%, up 5.78, and the materials was up 5% as well. Everything else, there wasn't anything but energy that wasn't up at least 3.25%. Now, energy was really kind of interesting. We'll get to see that in a second. Then it really kind of went nowhere, but it is still what I think is going to be one of the strongest sectors out there. So starting to look at utilities here. We had a +1 on utilities. You can see Tuesday, kind of an inside candle right there. Wednesday, Thursday, and Friday, it we had a nice rally along with everything else. I had a little bit of a red candy. I would be at a +2 if we broke out of that, if we made a new swing high above 78. Once we get that, I could fully see a +2. There's just, I think, it's going to be some resistance right there. So, +1 until it breaks through that resistance, and then I'm more than happy to be +2. This is the second best looking sector that's out there right now. Comm services, we were at a -1 last week, and I'm at a -1 this week as well. It couldn't regain that 50. I mean, it made some significant gains, no doubt about it, but it couldn't get up at that 50 period moving average right there. So I think we're probably going to be in this little bit of a range, right there between the 53 and the 56 level. We'll see where it goes. This is really at the mercy of the rest of the markets, but comm services is still one of the weaker. This is one of the weaker -1s that's out there. Real estate, I'm at a 0 right here. It regained the 50. It's below the 20. That's just my rules. If it's stuck between something like that, I just want to see where it's going to go. Once it makes a decision, then I'd be more than happy to decide, to go long or short real estate. Industrials, and we're going to see this. You're going to see a lot of the same things right here. It's above the 50, below the 20. Right in the middle of that range right there. I mean, you are stuck right in there between those moving averages. So I'm at a 0 on this one. We'll see where it goes. And I mean, that's the theme this week is let's see where everything is going to be going. Looking at healthcare. I mean, this is another one right there. We're right at that 0. The healthcare had been flattening out. I mean, we went to a -1 the past 2 weeks. Now it's just at a 0. It's range bound now. Healthcare had been doing very well for us for a long period of time, but now we're just, we're in this 3-month range, and we'll see where we're going to go at this point. So I think there's a little bit of upside. I mean, you could make this a +0.5 if you wanted to, but let's just see. I mean, there's a lot of energy that was expended Wednesday, Thursday, Friday throughout the entire market. And then, as we said before, we're going to see how much carryover is going to go into next week. Financials, actually looking okay. Regain the 20 period moving average. I'm at a +1. Not completely bullish on there, but we can drift up into that area about the 35.50 area right there. Just a short little drift, and we'll see where it goes. But it did well to regain both the 50 and the 20 period moving average in a single week. Consumer, another one, +1. I'm not overly bullish on anything right here, but I can't be as bearish as what I was. So we're regaining the 20 right there. And again, this one just could coast up a little bit, up to that new swing high, and then it's a whole new ball game if it does that. Tech is not looking good. This is going to be a -1. It had a really good run, but couldn't regain that 50 period moving average. So we'll see where it goes. I mean, there's a lot of, this is still below the 50. You can't be overly bullish on this. A lot of energy was expended. This is the same thing. We're all in wait and see mode for the next week. Materials was at a -1 last week, but it really got up there, and it's, you could make me that call that it's at the 20. I want to see 1 or 2 more days, and then I'll be more than happy to be a little more bullish on materials. Right now, I'm at a 0 right there. Energy had been at a +2 for a long time, and I gave it a +1. It didn't have as much gains. I mean, it held in there fairly well, but it didn't have as much gains as a lot of other things did. Still looking pretty good. Once it breaks through that 85 level, I'd be more than happy to turn this back into a +2. But until then, I think we just drift up. On the negative side, just at a -1, technology and communication services. We've got 4 sectors at 0s: real estate, healthcare, materials, and industrials. And the ones that are looking good, looking bullish: consumer, financials, energy, and utilities. So let's take a look at some potential trades this week. So last week we had a trade on in AES. We were long that, and that was a utility that went up 4.89%. So we were quite happy with that trade. This week we're looking at Southern Corp. This has been a nice bull pullback. It's right at a swing high resistance right there, right at about that 80 level. You can play it to a couple of different ways. You want to play it a little more aggressively. Do something like a diagonal call spread, go long those October 75s and short this next week's 80s. So you only have to play this for 1 week. And since you're so close to the money on those 80s, you're probably going to pull in a pretty good credit. And the only thing it has to do is just hold up there and close around 80, and you can decide what to do. Keep those October calls or turn it into a vertical spread, bunch of different things you can do with that. So communication services, last week we were short Dish, and this was just one of the weeks where things didn't go our way, even though it triggered on Wednesday, and then it ended up the week up 13.6%. So that's why we use options. Our risk is predefined going into the trade. This one we're probably just going to write off, but you win some, you lose some. This is just a week where took a bath in that one. This week we're looking at T-Mobile, nice high base right there, and this has been basing for a good month and a half right now. And if it can break out, then I think you've got potentially a month and a half to run right there. Near term, I think a $5 run up to 150 is probably a pretty good target right there. So what you go out those October 21st, go along the 143s and short the monthly September 148s. That's pretty good. If you don't want to go that type of aggressive, go out to October 30. You'll give yourself good 6 weeks and just do a 145, 150 bull call spread. You're banking on sometime in the next 6 weeks that you're going to break out of that 145 area and coast up to the 150 area right there. Either trade works depending on your particular risk tolerance. I think would be the best way to put it. Last week in healthcare, we were long CAH, and that one was down 1.5%. So I think there's another week left on this trade. We're going to see which way it goes, hold until expiration, and then we'll settle up at the end of that. This week, we're looking at Pfizer. Nice little bear rally right there. Wait for confirmation, though. Okay, this is going to go to the short side, and this is, again, the wait and see week. Had a really nice rally up to that 20-period moving average. Look how far away it is from the 50. This has had some really decent damage done to it in the past 3 months. It's captured that 20-period moving average right now. Wait for a lower low and a lower high, preferably on a down day, and then that's the perfect time to get into this. But as always, wait for confirmation before you do anything with these. Going to wait and play this just a straight up September 30th, 2 weeks, actually 3 weeks, 46-48 bear call spread.
Last week in industrials, we had 3M, Triple M short, and it was up 1%. So it's never fun when your shorts move against you. But we talked about this last week. When you have trades that underperform the market, so we had a big market rally last week, 3M only goes up 1%. That's a real underperformance. It tells you you're in the right place, but the big question is the market going to keep this up? And if the market stays strong, it probably is going to keep it up. But if we get some down movement in the market, this 3M should accelerate to the downside. This week we are looking at UPS. So here we got this really nice bull pullback. We've got this run up here to some new highs. We get this really nice pullback, and you can see we had about 5 days of long lower shadows, meaning that people were coming into the stock every time it got down to that level. And on Friday, you can see we got this little confirmation candle. Okay, now I'm looking at this thinking, okay, ultimately this could go up and make a new swing high. But remember, we're at a zero in the market. And this is where I find bullish patterns. And I say, hey, I really like this in a bullish pattern. But I kind of hate where the market is and where the sector is in general. So I will simply take these bullish sectors and I'll just play really wimpy trades. And here's an example. To do a 195, 200 diagonal call spread. Or you can go in and do like a butterfly. Say, I'm going to go out and I'm just going to let it float up into 205. So you go 195, 205, 215, and just say, look, if it just floats up in this area, then it's going to be a really nice trade. So that's what I'm saying, is that even if you have a very bullish setup, I don't think the market is correct for you to take a very bullish, aggressive options play. I think you still want to play pretty boring, mostly theta positive stuff while we wait for a better trend on this market. So again, UPS, I like it at the upside, but I'm really playing it up to 200, 205 at the most. That's all I'm asking it to do. Jumping over to the financials. Last week we had Sallie Mae short, and Sallie Mae did not want to take any advice from us. It actually was up 7.6% for the week. So again, that's why Darren said we position size for max loss, and we just make a lot of trades. We don't make one or two huge trades. We make a lot of small trades, fully knowing that we're trying to make money on the aggregate. So this week we are looking at PayPal. Now this is one of my personal favorite patterns, and I love this bull flag pattern, where we get this run up, and then you basically get it like an ABC correction here. And then once you break out of this, it's a really good entry point a lot of the times, because you can get a pretty substantial run from this ABC correction. That being said, remember, I'm going to do the same thing I just talked about. I might be super bullish PayPal. I might think PayPal is going to run up to 110, 115. The problem is it's the wrong market to make that bet. When the markets are cranking and everyone's in a good mood and we got a nice strong trend, that's when you go for those. When you're in this choppy area where we're between the 20 and 50 and we've had all this volatility, no, this is where you just go and make some singles and doubles, and we wait for the market to give us some better trends. So I'm loving diagonal call spreads. Taking a look at this one, the 95-100, and you can see that we're basically saying, hey, that's the most I think you're going to get to. We'll put our trade out there. We've got 100 as our max gain point, and if it runs past 100, we don't get any more money from it. But if it just hangs out in this 96 to 100 area over the next week, we're totally happy. We'll take our gain and we'll move on to the next one.
All right, consumer. Last week we had Target sideways. Target was up 5.5%. So we're right at the top end of that profit area for the butterfly. If things cool back down and Target floats a little lower, it's going to be looking pretty good. It's again, the whole theme of this is wait and see. This week we're looking at something sideways as well. Philip Morris. You can see it's been in this range. It regained the 50, but it's got a lot of overhead resistance to that 102 area. So the theme here is if it can keep going up and regain that 20, this is probably a good place for a targeted butterfly. Depending on the strikes that you want to use, you're looking at probably the 97, 100, and 103 targeted butterfly. That's going to be looking pretty good. We're just expecting this thing to drift upward and over the next few weeks, and then you can take profits. Once it does hit that 100 mark, if you wanted to take half your profits, half your position down right there, that's always a good thing to do with a lot of these targeted butterflies, and then leave the other half on and see where it goes. In technology, last week we were short Salesforce.com, CRM, and that, like everything else, was up 5.79%. So I think we've got a little bit of time left in this, but we'll see which way it goes. This week we're looking at Shoals Technology. Nice high base right here. Didn't really move a lot, so this one is still basing right here. Once it breaks out that 28, I think you've got a pretty good shot to move up to that 30 area right there. That's looking pretty good. So possible trades, just go long the monthly October 25s and then short this next Friday's 30. That's going to be a nice, good diagonal call spread right there. Now, anecdotally here, I want to take a look at, I was looking at all the performance of our picks that we've had and looking at the stuff that was short. And you got to remember, we were short the stuff that was really, really weak. But you can look at a Dish Network here, up almost 14%. You're looking at Sallie Mae. I mean, that was looking awful as well. That's up 7%. And Rob, you're going to go into the Freeport trade next year in a little bit. But that was up massively as well. And this is just anecdotally, but I'm looking at this performance. It really feels, when I see moves like this and stuff that's just been beaten down and nobody's wanted for a long time, that just screams relief rally to me. I don't know what your take is on this. It's just something I noticed in some of the performance, that I don't know how long the legs on this are when you see just the rubber band snap back with no true buying behind it. Do you have any opinion on that, Rob?
I think you're totally right. One of the hallmarks of a bear market rally is that the things that went down the most go up the most in the rally. And the things that actually held up, they don't go up during these bear market rallies. So I'm with you. There are a lot of hallmarks to this, but that being said, I have to be open-minded that maybe I'm wrong. Maybe this is more than a bear rally. I have to play it right now as a bear rally, but I need to keep my mind open to where if we don't get a pull down and the market keeps strengthening, I've got to flip my mindset over to be more bullish and bearish. So I think you're right. I think it is more of a relief rally, but I've been wrong many, many times over 25 years. So I've learned to just be open to a change in opinion. Yeah, and you mentioned our trade in Freeport, McMoran, had a huge rally last week of almost 14%. So we were short. And again, the trade, there was nothing wrong with the trade, technically speaking. All that happened was the market rallied and pulled up everything that was looking weak. So this one has a week left. I doubt it's going to come down 14%. So this is, again, why we just position size for match loss, make a lot of smaller trades that we can just walk away from. There's no decisions to be made about this. It's already done. It's already done. We just walk away. And just in case something crazy happens, like they come out and warn on news and this thing crashes down to 25, we'll actually make a lot of money on it if that happens. But at this point, there's no more risk in the trade. So we have all the liberty to leave it on until expiration, and just in case something goes our way. This week in the materials sector, looking at Corteva. Now, Corteva has held up nicely, and what I really like to find stocks that outperformed the market when they had a pull down. So when the market sold off really in the middle of August, we had the market take a big drop all the way down under its 50-day moving average. Look at this one. It didn't care. As the market was dropping, it was holding up really, really nicely. Now look, where is the breakout of this resistance? Is it at 62.50 where it is now? Is it closer to 63? I don't know. And I don't care, because this is where I pull out my diagonal call spread and I say, okay, I want a free week. I want a free week of a 60-65 diagonal call spread. And I looked in the 65s, you can sell for about 25 cents. And what that means is that if it just hangs out here, the trade is going to be a small gain or a break even. If it trades up at all, it's going to be a really nice trade. And at 65, it's going to be a very, very nice trade, all for just 1 week of time. These are really good trades to make when you have a market that's maybe slightly bullish, slightly bearish, because you get a positive theta trade, meaning that as time decays, you're actually making money off that, and you've got a little bit of direction, a little bit of delta as well. So the Corteva, we'll see what happens, but I really like the fact that it's going to likely stay strong up here. Last week in energy, we had Chevron sideways. Chevron went up 1% for the week, so that's exactly what you like to see your sideways stuff do. This week, we're looking at Cheniere, ticker symbol LNG. This is the largest natural gas producer in the United States, and had a nice pullback. And look, sometimes you get what's called a V pullback, where you pull back, have a V bottom, and then you take off. Those are very easy and safe, and they feel good when you can make them. This is, again, back in August, so we got that. Got a nice V pullback. There was no chopping around. Sometimes you get a W bottom, and these are a little bit messier. You just need to have enough time for it to work its way out of this range. So I'm liking the same thing I just talked about, diagonal call spreads or targeted butterflies. And I'm really just looking at the 165 level. So here I have another chart that I like it. I'm very bullish on it. If this was a different market, I would be much more aggressive. I'd be looking at like a 175 target and probably looking to go out long calls or a pretty big bull call spread. Because the market's saying it's not ready to take a swing at it, I'm looking to be a little bit more reasonable. So I'm looking at 165. So I can either look at a 160, 165 diagonal call spread, or I could take a look at a 165 targeted butterfly. I might do a 175, 165, 155. These are both really wimpy trades. They're slightly bullish, but again, they're both theta positive, meaning that if the market just keeps chopping, these are going to be profitable trades. So speaking of profitable trades, for our traders, please go onto the Maverick Trading forum. And we always love to get a robust discussion for trades over the weekend. And again, if you see anyone on there that has a good trade, reach out to them and share your thoughts with them, because we always like to have our traders working together to make everyone as much money as possible. So let's go and wrap this up here. Markets are neutral. Look, you may feel like you know where the market is going, or you might even think you know where the market's going. I could give you an opinion of mine, but the reality is the technicals don't back either one of us up. If you were long and I was short, or vice versa, or whatever, the technicals aren't telling us anything. So you have to trade the market in front of you. So nothing really aggressive to the short side, nothing really aggressive to the long side. And I think you play everything fairly close to the middle. And frankly, I think you play everything a little bit cautious, because we are still in this September period. I would feel much better if this was late October to go more on the long side when the seasonality patterns get better. So I think it's just a time to be cautious as we wait this out before we get a nice trend. When we get a nice trend, we will jump on it and ride it as far as we can. But until then, we have to trade the market in front of you. Everyone have a great weekend, everyone. Goodbye.
Sure, everyone.